Bitcoin's been, for the lack of a better word, a nothing asset now for over a year. The first thing is, and I just gave you some of the solar side, it's getting to a point where the largest demand for it, because solar is the largest demand for silver at this point.
We have officially entered the hoarding stage of the physical economy. We see the giants moving. Elon Musk and Samsung, Nvidia and Samsung, and Meta's massive $6 billion deal with Corning for optical fibers. Why? Because the world is running out of the hardware needed to build AI factories. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Bitcoin's been, for the lack of a better word, a nothing asset now for over a year. And it's clearly frustrating people. It was a very different environment than what we saw last year when we were there. And I wrote the piece because we get caught in this, it hasn't been moving for this amount of time, which is true. But the reality is, as we've learned from silver was, unchanged not that long ago, since 2012. Now, all of a sudden, it's gone through the roof. We're starting to, people are out there saying, you can't look at arithmetic charts. You have to look at logarithmic charts. And the reason is because it didn't move for a long time. I think what we're in is a world where everything is moving faster. The pace of AI is moving so fast that every time someone wants to, hey, this is X% above the 200 moving average, I want to get out of it. And part of what I wrote in there is just a psychological belief with people, which is if you buy Apple, if you bought Apple at $2 and it went from $2 to $100 in a short amount of time, you're going to sell out of it. Because your brain is going to be like, that doesn't matter. I don't want to be involved. If on the other side, it takes 20 years to get there, same price, you're not going to get out of it as quickly. So I think the issue that really comes down for people is we're at this point where time has changed. And the easiest way to say it is when Dario Amodei and Demis Hassabis and all of these scientists come out and they say, every year in innovation is like what a decade was. Well, by definition, that means that when we reach the point of this stuff going, software stocks can quickly go to zero. They can. Not all companies will go to zero, but if you're not able to adapt quickly and pivot your business, which is really hard for big businesses, you're vulnerable. If all of a sudden silver becomes an issue and people realize we don't have enough silver, they start buying for the next 5 years. Think about the deals we've seen. Elon Musk did a deal with Samsung back in July for chips, $16 billion, and actually bigger than that. Nvidia did a deal with Samsung in October. We had this week Corning, which I've brought up on this show, gapped higher. And the reason it gapped higher is because optical fibers were clearly running out because Meta did a $6 billion deal with them. We are at the hoarding stage of physical stuff. Software is abundant. You can make as much code as you want sitting there and wherever you are right now. I can do the same thing. We can't go out and mine silver. We can't go out and actually find any other than it being in a drawer, maybe of a flea market or somewhere someone's trying to sell it. So I think we've reached a point that time is moving so fast that people have to realize if we need certain things in a certain amount of time, we can't get them if they're physical. We can certainly get them if they're based on software. And so Bitcoin fits in this world where I think it is a scarce asset. Things that are scarce are getting more valuable. And I think people just need to be a little bit more focused on if it goes down to 70,000 before it goes to 200,000 and it takes only a month to get to 200,000. Pay attention to silver. People that got frustrated ended up watching something go up dramatically in a short amount of time. I literally, in this weekend's video, I'm putting it together now, and I have a chart in there of gold relative to the S&P back to 1970, and it peaked magically enough in 1980, which was when the personal computer basically got credited as starting. Personal computer, or IBM, actually came out in 1981, but the reality is between the Apple III coming out in 1980 and IBM's computer coming out in 1981, that was basically the peak in gold relative to the S&P. I have said before, and I will continue to say, that I believe what is happening right now is that we are entering a world where all companies, all enterprises, all mega cap stocks are going to have trouble dealing with artificial intelligence, and it's the rise of the entrepreneurs, and it is basically a slow moving problem for all of the bigger companies. Now, they will be at a point where they'll be replacing employees, but what we're seeing with the hyperscalers, and what I want people to understand, we've already run into a capacity problem. We can't run as much code as we want to run because there's no cloud for it, which means these businesses are going to be forced to buy their own AI factories, which is what Jensen Huang has talked about. When you buy your own factory, meaning you're making your own tokens, well, great. Now you're going to be CapExing. This is going to be a very challenging thing to get through this. So I think we're at kind of the inflection point, but the only way it works, and it's a race for getting the physical side. So hardware should be bought, anything that needs to create compute. And that goes farther than just semiconductors. It goes farther than silver, farther than copper, because you're getting into the energy side. And that's one of the reasons why oil went higher. And you're going to hear me talking more about it. The cost or input of silver back in fact, you probably haven't heard this, but this will be on the video. In 2019, silver's percentage cost for solar was 3%. It's now up over 30. So that means that solar is getting more expensive and the cost or the input cost is becoming more silver heavy. Now, silver could easily go up another 3-4 times from where it is because of the fact that we don't have enough supply, and it's needed in the military, and it's needed for the data centers and the phones and everything else. So you're starting to get into the world where it has an impact on solar production, which has an impact on power production. We have gas turbine shortages. This is one of the reasons why eventually it trickles down to oil, it trickles down to aluminum, it trickles down to everything, because we're looking for replacements for everything. When you get into a commodity bull market, which we haven't been in for since 2003 to 2008.
Bitcoin fits into this world as a scarce digital asset in a world of abundance. It is the only digital physical asset. It cannot be printed, and it cannot be coded into existence like software. Visser's advice is simple. Pay attention to silver. The same metals mania that sent silver through the roof is the precursor for Bitcoin. If you're frustrated that Bitcoin is at 70K, remember how fast silver moved once the nothing period ended. A move to $200,000 or even $300,000 for Bitcoin is a mathematical outcome of the scarcity trade colliding with the...
And the biggest critique, so in Hassett, you end up with a scenario that people are worried about the credibility of the Fed. They're worried that he's just a yes man for Trump. Warsh gets in. Warsh has been hawkish his entire. He was hawkish during the great financial crisis. It's very difficult for you on one side to say, okay, you're going to cut rates, right? We need them to be down 100 basis point, which is clearly what Trump wants, and then put someone in that doesn't agree. So he's had to find someone, I think, that is credible, which Hassett clearly was not, and at the same time believes what he believes, which Bessent believes too. And that's why my gut tells me that the reason Reader has ridden up the ranks is because he agrees on those 2 points. He believes rates should be lower because we should be thinking ahead. I think the only way that you can do that is if you're less academic, and he is the least academic of the group. And I wrote a piece on this, that the Fed is going to have to be less academic going forward. It's going to have to be more forward-looking and caring less about the past. And I think as investors, you've had to do the same thing. So that's where I think this is coming down, is that Reader is taking the lead because Trump wants to get someone to lower rates. And to do that, you have to believe in technology and the disruptive impact. The first thing is, and I just gave you some of the solar side, it's getting to a point where the largest demand for it, because solar is the largest demand for silver at this point, you should start to see less demand for solar, and you'll start seeing switching to some degree for, okay, let's do coal, let's do natural gas, let's get generators, whatever the case is. The problem is silver is also used and needed, like I said, in the military. This is a critical mineral. There's a reason why they have the name critical mineral, and I want people to fully grasp this. Rare earth, silver, these things all fit into it. I mean, the U.S. has basically been making announcements after announcements since the tariff situation. So my belief is that all of these things are going higher. At a minimum, here's what I'll say. Even if silver, let's say it peaks at 125, it goes to 200, it falls back to 100. The main thing I can say to everyone is, it isn't going down in price when we need it for all those S-curves hitting at the same time. I wrote a piece for 22V this week where I highlighted the S-curves are all happening at the same time, meaning we're at that point in the S-curve where all the demand kicks in, and it's happening at the exact same time. We need it for EVs. Autonomous vehicles are getting revved up. Autonomous trucks are getting revved up. Humanoids, drones, everything in the military. We're rebuilding the military. I don't know if we talked about it last week on the show, but I've talked about it before. Certainly, we ran out of ammunitions. I mean, munitions for the United States were down at very low levels post Israel from getting to them, and also Ukraine. We need to rebuild the military. At the same time, Europe is building up their military and doing it for the first time. And you've got people like Jeff Curry, who used to be a Goldman Sachs, doing interviews saying this is as big for Europe as it was for China in 2003 to 2007. I'm not getting into the numbers of the commodity needs there, but both of those are price insensitive. If you're trying to have military supremacy, there's no price for this. People should go back and look at what happened in the United States during World War II and what we did for stopping people from using copper and what we had to do to actually go through it. The price was infinite. I think we're at a point right now where people just have to realize the only thing that could really make this pull off dramatically.
We are at an inflection point. The race for physical supremacy is on, and the only thing that could slow it down is if energy prices go so high that compute becomes unaffordable. But until then, the S-curves are vertical. The Fed is pivoting, and physical scarcity is the new king of the market.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.